Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday, the 28th of May. We've got a mixed outlook, I would say, around the European Open. We've got some slight gains, which we're still seeing through these equity markets. We saw S&P 500 really strong reaction actually into the close last night. But futures have started to sort of tail a bit, you could argue. We're coming towards the back end of this week now, and there was a suggestion from President Trump that the US was going to be announcing some sort of measures against China in response to the legislative bill that the Chinese government are putting through on security in Hong Kong. So US is looking to put sanctions on China, and how those sanctions take hold, or if they take hold at all, could be the determining factor as to whether this bull run or not just starts to lose some of its momentum and gets some profit taking coming through. And it's interesting that we've got at the moment the risk moves that are just slightly questionable through these markets, and I'll show you a couple of charts. We've got the oil price, which has just rolled over slightly in the last couple of sessions, down again today by about 2% on that Brent crude. We've seen that Treasury yields actually fell yesterday whilst the S&P 500 was breaking out. So that's a little bit of a concern as well. We've seen the dollar, which is slightly mixed as well today. But not only that, we have also got the Chinese yuan, which is under pressure still, breaking weakness yesterday, breaking the dollar yuan rate higher on the potential for this situation to blow up between US and China. So there are concerns out there, even though the markets are still pushing higher, and that is something that we really do need to keep an eye on, I think. Now, with regards to what we're looking forward to today, quite a bit of data this afternoon actually. We've got this morning, throughout the morning, we've got the German regional inflation data, and then that sort of culminates at 1 o'clock with the German HICP, which is expected to drop to 0.5%. Now, Christine Lagarde said the other day that inflation and price stability was a primary concern for the ECB. So inflation in the biggest economy in the Eurozone falling away quite sharply. That doesn't bode especially well there. We've got durable goods at 130 for the US, expected to fall 14% month on month in April, but again, that is April's data, and we've seen May's data starting to pick up and show some signs of improvement. So it'll be interesting to see what sort of weighting the market gives that. Also, we've got the second reading or the prelim GDP for the US, 4.8%, no change on the advanced reading. Weekly jobless claims 2.1 million. Now that is down from last week, 2.43 million, but still incredibly high numbers there. That continues to add US jobless numbers to the reading by the week there, doesn't it? And let's get back on that. And we've got also at 3 o'clock. 3 o'clock, the pending home sales expected to fall by 15%. But again, that is April data, so remember that. That is April data. Right, so where are we looking at in terms of my chart of the day? Now, FTSE 100 is an interesting chart because it's a big laggard. It's always a laggard. Ever since Brexit, FTSE 100 has always been a laggard. And you can see that because FTSE 100 has only rallied 25% there or thereabouts since the bottom. DAX and S&P 500 rallying over 40%. So massive underperformance there from FTSE, and struggling even to get above that 50% fib level, isn't it? I mean, the S&P 500 is between 61.8 and 76.4% fib. So really is struggling to get that traction in the recovery, but it has broken out this morning. 61.52 breakout. Now that drives a breakout and a completion effectively of what is a consolidation rectangle. If it closes above that level, it really is a positive signal for the weeks ahead, even if you might see a bit of near-term profit taking, a bit of a correction on some bad news, say for example the US-China relations. But 61.52, a close above that, is an important level if you can see that today. We've got this little uptrend that is still progressing on FTSE, and that comes in around 60.55 today. And you've got momentum indicators, RSI 60. That is just a shade above where it was on the previous move. So that is confirming effectively the breakout if you do see it. Also stochastics looking decent, and MACD lines as well. But I do hasten to add that this is an underperforming market still. You still got that uptrend on the hourly chart, and you're trading above all the rising moving averages. So the setup is positive technically. You'd be looking at buying into weakness probably, and you'd be looking at, well, you've got some decent support around 6,100, which was yesterday's low there or thereabouts. Also some breakout levels up to 61.50 area. So it's a pretty decent band of support there to look for buying opportunities. But certainly, finally, we're starting to see FTSE breaking out, and it'll be interesting to see if it continues. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click here to watch our Trader Talks videos to gain some top trading ideas.